Mahantesh Sabarad as well joins in on the show right now. Mahantesh, hi, afternoon. Good to have you on the show. Just wanted to understand, Mahantesh, what's weighing down on the entire metals pack, you think?
Good afternoon. Thank you for having me. I think the metals pack underperformance has to be linked to the Chinese market. Essentially, China is the market that drives the global commodity markets. With a depressed kind of real estate market in China, which the government is trying to in a way revive, foretells us that probably the metal sector demand dynamics will remain quite subdued, and therefore. Indian metal market or Indian metal companies being exposed to global commodity prices and price fluctuations are naturally getting affected by that.
Okay, that's the metals weakness. Kunal, what's your reading on the charts? Because up until last week, it was actually metals which was leading the rally, right?
Well, yes, Aisha, and in fact, my strong belief is that many of these metal stocks are actually looking very, very attractive. So these are high beta stocks. They would probably be one of the, I would not say the last sectors, but the sectors which tends to move in the last leg or the last phase of the strong bull market trend. But we've seen historically that whenever we've seen the metal stocks participating, the rally for many of these metal stocks takes most of the metal counters above their multi-month highs and even multi-year highs in many cases. Now, Tata Steel, Hindalco, SAIL, for example, these stocks are about, I think, 10% or 15% still off on a round-off basis from their previous major swing highs, which means that these stocks have a potential of at least another second leg of uptrend. So I would probably, in fact, use this phase of correction or this mild drop down or dip into these stocks as a very good classical contra buying opportunities. Hindustan Copper, Tata Steel, SAIL, these stocks looking very attractive on the charts, and as I mentioned, I would look out for at least a 10 to 15% upside further for these stocks over the very near term.
Thanks, Kunal, for that. But it's raining exclusives on EET now, and this one is an exclusive interaction that my colleague Ankur Mishra had with Axis Bank MD and CEO Amitabh Chaudhary on the sidelines of the GFF 2023, which is underway in Mumbai.
Almost every product which RBI is launching from the Innovation Hub, I think Axis Bank is one of the banks which is part of that exercise. So we have launched Kisan Credit Card, which you saw. We have launched a similar platform for MSMEs. We are launching UPI on credit. And I think you will see more and more of these products being launched by Axis because we do want to be at the forefront of this. We fully realize and appreciate that the market might not be ready. We fully realize and appreciate that in some cases, we still need some parts of the ecosystem to come together. But as I said, we are not waiting for it to happen. We want to be part of it. We want to be part of the development of this journey. And we are hoping that when they take off, which we believe they will, we will get the benefit of being at the forefront and being one of the innovators in this marketplace.
Another question which has been there in the market, you have given a release on Axis Max Life deal. You have yourself said that you are going to abide by it. But there were several reports saying that, regulator has concern. Is there anything from your side you would like to
We just announced a deal. This newspaper or whatever the item which has appeared, I think relates to some of the discussions we had with the regulator more than a year back. There's nothing new. We have not gone to the regulator with the new application. Let it happen. Let us get us the permission. Then we can talk about it. So I think it is all speculation at this stage, and that's what I'd like to leave it at.
Okay, that's the word coming in from Amitabh Chaudhary. In the meantime, let's take stock of what banks are up to because they are the private banking names, that is. They're the ones which are the underperformers today. So IndusInd Bank is almost down 2%. Axis is down 1.6% on the futures. About 1.5% dip coming in for ICICI Bank as well. And SBI as well is languishing in trade as we speak right now. Although HDFC Bank is not. It was one amongst the top movers on the index and continues to be so. About a 1% move is what you're saying on the stock right now. Nuresh, let's revisit your thoughts on the private banking names, IndusInd, HDFC Bank, ICICI Bank, and what you're reading on the charts.
So I'll start off with ICICI Bank. The stock earlier had made a top around 960, which got tested again in May, June. And we are still around that 960 plus minus 10, 20 points for the last almost 2 months. So technically, still the bias is positive till the time we hold about 940 levels. About 1000 is where it gets into momentum. Then we go at IndusInd Bank. The stock has tested 1430, 1440 for almost the 5th time in the last 2 months. If it sustains above that, that would be a breakout. Same is the case with an Axis Bank. The stock has tested that 1,000 mark almost 4 or 5 times over the last 2 or 3 months. So if you look at it technically, once we see a follow-up price action on these three names, that could be a breakout. It's only HDFC Bank which is at the lower end of the range, as well as Kotak Bank. But HDFC Bank also has a lot of supports around 1550 to 1575 mark, which is where it is holding on for the last 1 to 2 weeks. So overall, the whole space looks promising. We are just waiting for price action confirmation. Say an Axis Bank crossing 1,000, IndusInd Bank crossing 1440, HDFC Bank crossing 1600, 1620 levels, ICICI crossing 980. Those would be an indication of a momentum confirmation. So the whole banking space looks interesting and on radar for a breakout.
Space looks interesting. And Mahantesh, I want your view on the banking sector as well, but I want your view on the story which my colleague Ankur has broken exclusively, and that's on the incremental CRR. Remember, it was the announcement that came in the Monetary Policy Committee meeting, and the Bank Nifty had seen quite a bit of downtick on account of that. This means that the banks had to hold initial, incremental cash, etc., on their books, which they could not use for lending. But now we understand that there was going to be a review ahead of September 8th. That review is underway, and what is possible is the fact that ICRR might continue for a few more weeks. First up, let's go to Ankur, and then I'll take the view of Mahantesh as well. Ankur.
Yes, sources say that Reserve Bank of India is going to review the situation on incremental CRR very soon. In fact, if sources are to be believed, the decision might be taken today itself, and the announcement may happen maximum by tomorrow. Remember, Reserve Bank of India has imposed incremental CRR on banks, and this was a targeted tool by Reserve Bank of India because they found that liquidity situation has been in surplus, especially after 2,000 rupee notes were deposited in the system, and therefore this targeted approach was taken by Reserve Bank of India. But you would remember then on August 21, first time there was a situation when the liquidity went into deficit, but after that the situation improved. Many of the bankers we have spoken to have told us that they expect Reserve Bank of India to continue this incremental CRR for few more weeks, and we need to wait and see what decision actually Reserve Bank of India considers. If you see the liquidity situation, it has already been back into the surplus, but all will depend on the assessment of Reserve Bank of India on incremental CRR.
Thanks so much, Ankur, for joining us with those exclusive details. Mahantesh, your view on the story and the banking sector?
So let's go back to what the RBI had announced when they made this incremental CRR, policy decision. They had clearly mentioned it was going to be a temporary phenomenon, and it was expected by the next monetary policy meeting, which means an intervening period of 2 months. They would review it and possibly revoke that incremental CRR. My expectations are that since it's a temporary measure, it's not a classical monetary tool that RBI needs to exercise for a long duration. And I said, therefore, suspect that this will be revoked. If not in the coming week, it definitely will get revoked by the time we are into the next monetary policy meet. So having said that, I think that could sound a bit of positive news for most of the banks. Remember that now we are going to enter the post-monsoon credit season, wherein you will find, normally speaking, the deposit growth actually accelerate further ahead of the credit growth. That being the case, we will probably see the incremental CRR getting revoked.
Okay, that's that on incremental CRR. In the meantime, let's also get you a buzz on what's the dealing room chatter, the fact that we made it back to that 19,600 print. So sitting at the day's highs, Sharad is here with all the dealing room chatter. Sharad, what's the stock that dealing rooms are talking about this afternoon?
Well, yes, in focus we are having home first finance, and what we are hearing from dealers is there's buying seen in the counters on the HNI segment. The volumes also of the stock, if you see, is almost 3 times its 20-day average, and also the buzz is that The company itself has been meeting a lot of conferences and they have been meeting a lot of marquee investors as well. Importantly, there is an important buzz coming across the real estate space as well, as the festive season is expected to pick up, and the luxury players as well as the domestic affordable housing players, both these segments are expecting a strong move going up. And because of that, there is a buying scene in these affordable housing companies as well. Now, for Jefferies also came out with its report and they've stated that the housing companies, finance companies have actually not run up and the valuations are still attractive as compared to the retail NBFCs. And also importantly, the potential revival coming in for the interest subsidy for the affordable housing finance augurs well for the industry.
Okay, Sharad, we leave it at that. That's Home First Finance on the radars this afternoon. Important to mark what the global cues as well are looking like, because both from the US handover, or for that matter, how Asia was this afternoon or rather this morning, or for that matter, how European stocks have actually kick-started trade, it's actually a weak trajectory all along. FTSE is now around 0.7%. Similar is the price action for a CAC, for FTSE MIB, which is down 150 points, or for that matter, 0.6% cut coming in for the stock 600, or the DAX, which is also mildly soft with regards to how oil prices have been moving. But you're not really facing the heat for our markets, which have actually recovered ground and made it back to that 19,600 mark. Kunal, you think 19,600 is sustainable?
Well, yeah, broadly think 90,600 is sustainable. In fact, over the last 2 days, actually, I've been giving buy calls on the index, and my view has been on the bullish side. So even after intraday dip of that 40-50 points on the index, didn't change the view. In fact, the best part about the day today is large cap stocks slowly and steadily making a comeback. For example, HDFC Bank, as you speak, I think is almost at a 10-day or a 12-day swing high. Now that's a very, very interesting phenomena shaping up, because today the volumes for HDFC Bank are one of the best volumes, at least on the future side, in the last 4 or 5 days. This shows that there is activity which is perking up back again into the large cap stocks. And whenever large cap stocks they tend to participate or get back into the line of into breakout zones, we've seen historically that the Nifty sustains the up move. So I strongly believe that with large cap stocks participating slowly and steadily, at least those signs being visible, I believe that the index should see more upside. Would maintain those targets of 19,900 on the index, possibly in the next few days.
Okay, that's the take coming in on index. Seems like gains are here to stay. But let's take in some BTST trades as well. Naresh, on your list?
So, two large caps, buy on Reliance Industries, stop loss at 2,400, target price of 2,480. Second, a buy on ICICI Bank, back at the support area, stop loss at 948, target price of 970.
And Kunal, what about your BTST ideas?
So CESC is the first stock which I would recommend as a buy. I had given this yesterday as well. Maintain the targets of 104 on the stock and stop loss at 85 would be extremely bullish on the stock over the near term. And Crompton is the other stock which is also heading towards a flat pattern breakout, trading at 308 approximately. Targets of 330, stop loss at 295.
Okay, that's the technical strategies coming in, some BTST ideas as well. Mahantesh, in the days to come, what's that one news point or sector news that you're going to track?
So I think what we're going to look at is the oil and gas sector, primarily because the government is now introducing the so-called subsidy element. If that comes true, probably that could be a little negative news for the oil and gas sector ahead. And the second bit of news I would look at with the kind of complete recovery happening in the US economy, probably the IT sector will start announcing newer deal wins, and the sector outlook can look potentially better.
So that's a take coming in. Thank you, gentlemen, for joining us. Naresh, as well as Kunal and Mahantesh, for your take on the markets.